Bloomberg Audio Studios.
Podcasts, radio, news.
So we now anticipate that the ECB will be delivering a June cut. But what about what happens from there? Effectively, we saw yesterday Lagarde declaring independence from the Federal Reserve. We are going to do our own thing. But how long can that last? Well, I've already mentioned him. Let's talk to him. Jean-Claude Trichet, former president of the European Central Bank, joins us now. She almost used the word strong vigilance yesterday. She decided, Christine Lagarde, that a rate cut is coming in June, Jean-Claude. My question is, how much further do you think those rate cuts will go, given the fact that it looks like the Fed is going to be on hold for a while?
Well, thank you for your invitation. First, I would say, clearly, she did not discourage the market to think that a decrease of rates will take place in June. She was not committed, but she did not discourage. She knows, and the ECB knows, how to guide the market. The proof is that in the last meeting yesterday, there was no anticipation of decrease of rates because the message coming from the ECB was quite clear. So my understanding is that yes, we do not discourage you to foresee a decrease of rates in June, first. Second, we do not want to be pre-committed on the successive possible decrease of rates. We have no pre-commitment, and I think it is justified in the very, very, I would say, hectic, demanding and dangerous world in which we are. So I think it's better. I think she did quite well. We will see what the market does for that, but the idea that the ECB might be legitimate in decreasing rates when the US Fed is not as legitimate comes out of the fear. You have a full 1% difference between the headline inflation and the core inflation on both sides of the Atlantic. That makes a difference when the target is the same, namely 2% in the medium run.
Jean-Claude, does America have an inflation problem and Europe a growth problem? Is that how we should think about it?
I think that, yes, indeed, you can sum up things like that. You could also say the policy mix in the US remains expansive because of the fiscal side of the policy mix, when it is not the case in Europe. So you have also obvious difference between the two sides of the Atlantic. And you also have to recognize that war in Europe is a problem for the European growth, much more than the problem for the US growth. So you have at least two reasons to think that it's not abnormal that growth is more dynamic in the US than in Europe. That being said, as I said, in terms of inflation, the target is the same, 2% in the medium run. That might explain why the policies, the decisions of the central banks are not, I would say, absolutely the same. As said Christine, and it is true, the target is the same. The present situation is not the same. You are in two ships that are not in the same position, even if they go to the same harbor.
Two ships not in the same position, even if they go into the same harbor. Two different stories. Two different fundamentals, but ultimately related at its core. We've seen that U.S. resilience prop up several economies, not to mention the corporate stories in Europe. Jean-Claude, talk to us about the kind of triple effect, or the ripple effect, I should say, from the U.S. stickiness in the inflation story into Europe. What's the read-through?
Well, again, the two major economies, we are speaking of the two extraordinarily big economies in the world, at least in our case, a single economy that is of the size of the US. So we are interacting clearly, and we have to take into account both. I would say the US has to take into account what goes in Europe, and the reverse is pretty true for the European. We will see exactly where we go. I take it that as long as the Fed is credible in this idea that the definition of price stability remains 2% in the medium term, it seems to me that it helps considerably, because the expectations on both sides of the Atlantic on a medium and long-term basis are very close, obviously. And I see that the market are trusting until now both central banks as being credible in their policy. After all, the fact that the Fed augmented rates 11 times and the ECB 10 times gives some credit to what they say in terms of price stability.
Jean-Claude, what about this bond market here? The last time we had this kind of panic in the long end of the U.S. curve, it was in the third quarter of 2023. Every single central bank around the world talked about it, from the ECB out to the BOJ. Now that we're talking about this yield move momentum as well, are you concerned about the pace at which the bond market is selling off in the States?
I think that we have experienced a level of volatility in the bond market in general, and in particular in the U.S. And the bond market of the U.S. is really the director, if I may, bond market at a global level. So we know that it is more I would say, hectic than we are used to. And I'm not too surprised that to the extent that there is a big change in the perception of the market on what's happening exactly in terms of inflation in the US. And even if, again, there is no change of the target of the definition of price stability, I'm not too surprised. I would maybe underline more what's happening in the stock market, because the bond market doesn't seem to me aberrant. I mean, they are capturing new information. They are making this new information transmitting them into the prices. I am a little bit more worrying on the stock market on both sides of the Atlantic and everywhere, taking into account the present dangerosity of the economic and financial sphere. When I look at some indicators like the overall outstanding public indebtedness in the advanced economy, I see 75% of the GDP before Lehman, and I see 114% today, meaning that we have an indicator that is, I would say, more worrying than it was before Lehman, before the big financial crisis. So I don't want to be too negative, but I am circumspect, if I may. I think we have to care for the dangerosity of the world.
Jean-Claude, is there a little too much irrational exuberance in stocks?
I don't exclude that. I don't exclude that. And we have some, I would say, a number of factors that are playing in this direction, including, of course, the fantastic AI jump that we are observing, and also the fact that the central banks did the work quite well until now, I have to say. It's quite remarkable that we totally avoided the, I would say, expansion, the drama of the inflationary episode that we had after the first and the second oil shock. So I trust that the central banks, the Fed, the ECB, did quite well to prevent us from having this kind of drama. And of course, it is judged positively by assets markets. That being said, again, it seems to me that maybe a correction will appear necessary at a certain time, and I would not be surprised if we are observing that.
Jean-Claude Trichet, thank you so much for your time. We really appreciate it. Former President of the European Central Bank, of course.